Now let's see the next indicator, Bollinger Band. So Bollinger Band will have a graphical representation something like this, where we'll have three lines, right? So the upper line will be, very first line will be the lower Bollinger Band, and the upper line will be the upper Bollinger Band, lower will be the lower Bollinger Band, and the middle one will be known as middle Bollinger Band. So Bollinger Band basically shows the volatility of a stock. So this is the, I mean, I've not drew into exact format the way it should be looking, it's just for your mere understanding. But this shows that the stock can be volatile to this limit. Hence, if you know that if the actual prices of the stocks are falling beyond this, it's a time for you to buy it, because now the trend is going to get reversed. If the stock has touched the upper Bollinger Band, that means it is the time for you to sell, because you know the stock is not going to go beyond this upper Bollinger Band. If it goes beyond, it will go very slightly, and again the reverse trend will occur and the prices will start falling. So Bollinger Band will actually gives you the strength of understanding exactly what should be your buying and selling strategies. Now, how to calculate Bollinger Band? So middle band can be calculated by simple moving average of 20 days, the closing price will be taking. Upper band you'll be taking by calculating simple moving average for 20 days closing price, and you'll be adding twice of standard deviation for those closing prices. How we do it? We are going to do it in Excel, and that is going to give the clarity of exactly how this calculation is going to happen. The lower band is the same, that instead of adding the twice of standard deviation, we are going to subtract twice of standard deviation, and standard deviation will, as I told you, will tell you exactly what's the volatility of a particular stock. So by usage of Bollinger Band, you know, you should come to know what should be your buying strategy and what should be your selling strategy. Okay, let's go ahead and understand how to calculate Bollinger Band. Remember, in Bollinger Band we'll have three lines, the middle band, the lower band, and the upper band. Calculation of middle band is very simple. It's nothing but the moving average or simple moving average for 20 days. Now, to calculate the lower band, you need to subtract twice of standard deviation from the middle band, and to calculate the upper band, you need to add twice of standard deviation in middle band. So let's get started. Let's calculate standard deviation for 20 days. So here we have the close price for 20 days. We'll be using the formula is equal to standard deviation, bracket open, for the 20 days, bracket close, and here we have standard deviation for 20 days. We are going to use the autofill function so that we have the standard deviation for the entire duration. Now, since we have the standard deviation, the next easy step that we are going to do is to calculate middle band, which will be basically your average for these 20 days. So you say is equal to average, bracket open, close price for these 20 days, bracket close. You have 100.84 as the average. Now use the autofill function and calculate middle band for the balance date. Now remember the formula for lower band, it was middle band minus twice of standard deviation. So here we go, we say is equal to middle band minus, bracket open, 2 into standard deviation. And here we have our lower band, and now we are going to use the autofill function. Now let's go to the upper band. This will be is equal to middle band plus, bracket open, 2 into standard deviation, autofill function. And this is how you're going to get the upper band as well. So we have got our middle band, we have got our lower band, and we have got our upper band. If I select this data and put it into a graph format, which is basically your insert, recommended charts, and you go to your line chart and you say okay, so this is how your Bollinger Band should look like.